Hello and welcome to Let's Talk Business. Bears continue to tighten their grip. Markets were marred by volatility for the fifth consecutive day, closing at nearly a 4-month low. The metal sector advanced, whereas media, IT and realty were under pressure. Hiral Dadia with the wrap of all the market action.
Benchmark indices did open on a positive note today, and this was clearly mirroring firm cues from the global markets. However, actually, we did see a sharp plunge in intraday trade, with the Nifty and the Sensex falling nearly 0.8% basis Monday's closing. You have all the sectors that have ended in the negative except the PSU Bank Index and the metal sector. In fact, it was the metal sector that came to the rescue as well on the back of China announcing stimulus measures, which would be positive. If you talk about PSU banks as well, they were the top losers in terms of Monday's session, and today they saw some bit of buying that did emerge. Oil marketing companies declined as well on the back of the way Brent prices have been panning out. Sugar stocks rose as well because sugar prices have risen to a 12-year high. So that sector was in focus. If you talk about overall broader markets, they mirrored large cap peers as well. So you had the mid cap and the small cap index, which ended 0.5% lower. A 500 points cut in terms of the Sensex, whereas 160 points cut in terms of Nifty 50 is what we saw. Taking a look at the top gainers, you had names like Tata Steel, Coal India, Hindalco, Tata Consumer, as well as SBI Life. Whereas on the losing end, you had names like Apollo Hospital, Adani Enterprises, SBI Life, Cipla, and Eicher Motors. Aditya Birla Fashion was in focus as well on the back of the block deal. Dreamfolk Services recovered on the back of earnings. Welspun recovered after a recovery was seen in terms of earnings as well. Talking about broader markets, Welspun India, Bajaj Consumer, Aster DM, Newgen, Amber, these were few of the top gainers in trade today. Whereas on the losing end, you had names like Vector Food, Jubilant Pharma, Team Lease, as well as Data Patterns. So clearly, a lot of stock-specific action is what we've seen. However, in terms of where markets are concerned, whether this downtick will continue or not is what we need to wait and watch. Back to you.
Now, as volatility continues to rock the market, Andrew Holland and Manish Sonthalia sound bullish on the India growth story. Ashish Dhawan of Chris Capital believes that Indian markets will scale new heights in the long term. Here are the highlights of the conversations BQ Prime had with the top market gurus.
I would believe that next 6 months it's a sideways market.
Okay.
But it is also a great time to build a portfolio from the medium to long-term point of view as far as India is concerned. Of course, we are talking about recession in developed parts of the world, but India couldn't have it any better than where we are. I would believe you could be staying within, let's say, a 19,000 on the Nifty to 20,500 on the Nifty for the next 6 months, for the simple reason that dollar index is near its all-time high, oil is on the boil, you have geopolitical tensions, inflation is still a worry, rates are still headed higher, at least as far as one more hike is concerned in the US. So all these things would keep the markets tentative. We could be in for a risk of trade at the moment. So to answer your point directly, could there be a tactical moment to deploy funds at a later date between the next 6 months? The answer could be a yes. But could you time it to perfection? I would believe no. So anytime between the next 6 months, it would be a great time to deploy capital in India.
Already invested in the market. If I believe the market's at a pretty high level globally, and therefore there's some risk to the Indian market, it makes sense to take some chips off the table and to possibly be, have 10-20% of the portfolio in cash or cash equivalents. If you are not invested, I still think it makes sense to invest because to have 0% exposure or very low percent exposure to equities doesn't make sense because I may be completely wrong. There may not be a sell-off at all. And clearly in 5 years or 10 years, the markets are going to be much higher than where they are today. So I think for every Indian, you must have equity exposure and it should be well above 50% of one's portfolio.
Wall of worry and then, earnings get hit, and then the markets fall. And then you get to the point where, yes, demand is falling, inflation's falling, so therefore interest rates will fall. And that's when emerging markets come in. Now, is that towards the back end of the year or the first quarter? Not so sure. I think it should be towards the back end of the year that narrative starts to play a lot harder. But, there's only a couple of more months to go. So let's see if that plays out. But certainly going into the year, that could be the narrative. Now, for India,
with earnings season on in full swing, PNB Housing Finance also reported its numbers. The company's profit rose in the second quarter on account of an increase in interest income. Here's the MD and CEO explaining the measures that were taken in order to revamp growth this quarter.
We had to do a lot of work internally to try and get growth back, to improve profitability and also raise capital. So in last 1 year, we raised capital. We got back growth. We worked on corporate resolution. We grew corporate book, and there was growth in both disbursement as well as book. I had mentioned earlier the disbursement growth would first show up and then the book would catch up. So we had guided a book growth of about 17 to 18% this year over last year, and that is on track. So we'll be able to show growth of 17 to 18% on book by March. On disbursement, we had said we would grow at about 22+%. We have reached, on retail, we have reached about 18%. I think even that guidance is on track.
Now let's shift focus. The cases of smuggling gold in India have seen a sharp uptick. The seizure of smuggled gold has increased by 43% between April and September compared to last year.
Customs Department has noted a 43% rise in the seizure of smuggled gold in the current year between the April to September period as opposed to the same period in the last year. So far, 2,000 kgs of smuggled gold has been seized by government authorities. In comparison, last year, for the same period of April to September, 1,400 kgs of gold was smuggled. Now, speaking about what they have observed, CBSE Chairman Sanjay Kumar Agarwal told media today, post the narcotics destruction drive in New Delhi, that there has been an increased activity of smuggling and also seizures noticed via land borders of Nepal, Bangladesh and Myanmar. There's also been smuggling cases that have been noticed in international airports particularly, and the government is also ramping up its concerted efforts to tackle such a thing. We cannot find, of course, the reasons of why there is a sudden spike, but the differences in pricing between international prices and domestic prices could be one of the reasons. Upcoming festive season is also an important timeline to take note of, but as things stand, the government is taking more concerted efforts to curb gold smuggling, and that can also be noticed by the increased seizures that have taken place. That's all we have for you. Back to you in the studios.
All right, that's all from Let's Talk Business for now. Back to Gargi with all the other news.